Brian, thanks for joining us. So Chinese home buyers in up to 50 Chinese cities, they're refusing to make mortgage payments on unfinished homes. Now, this is unprecedented. The Chinese property market was far from doing well in the first place, right? And now is this just adding fuel to the fire?
This is one of the more fascinating developments in China. So the dynamic is fairly simple. Chinese home buyers prepay for homes. They put down a chunky deposit, a down payment of 20 or 30% or more. They get a mortgage for the balance, and they buy a home or an apartment that they expect to be delivered in, say, 2 or 3 years. The money is supposed to be held in escrow so that the buyers will know that the funding they've provided to the developer will be used to purchase the apartment they're contracted to buy. But we all know that the banks have allowed the developers to dip into those funds, and in many cases the funds aren't there, and now the buildings aren't being built. So it sounds like there have been letters circulating online where home buyers are talking to each other and saying, the banks at fault here for letting the developer use our down payments, and now we're not getting our apartment, so why should we pay the mortgage to the banks at this point? So they have a pretty good point. There's 50 developments, maybe 100, some stories are reporting, but I can promise you there are many, many times more developments in China that aren't moving. There are probably thousands of developments where the construction has been halted, where the buyers who are waiting for apartments to be delivered can drive by and see that there's nobody working and nothing's happening, because we know that the financing strains have now infected the entire sector. So they need to, when I say the authorities need to put a stop to this, or this could become a danger for the financial system quite rapidly. But if they can control it here, it's not really a big deal yet. The problem would be is if this becomes a movement.
Do you think they'll be able to control it? What are the chances?
Well, as I said a moment ago, they seem to have rapidly cracked down on any online chatter. There's no real telling whether the genie is out of the bottle. There's two approaches they could take if it spreads. One is the approach of really flooding the banks with liquidity and telling the banks you have to finance developments under construction at all costs. There's a more heavy-handed approach they could take, which is to just start arresting people who aren't paying their mortgage.
So, Brian, let's talk about the demand. Due to an aging population, the property buying demographic, which is the working age population, fell by 20 million since 2015. So what are the chances of the Chinese developers getting out of this crisis?
They're not, in my opinion, and I think I've even mentioned this before on your show. I suspect that the bulk of them will end up being rolled into state-owned entities, and that would give the government complete control over what gets built and where and in what volumes and sold at what price. I think it's become pretty clear in the offshore bond market that very few of these developers are going to get out alive. So I think that's where this is headed. The question is whether they can strike a balance between funding the losses by printing money through the banks or saddling bondholders with some losses and saddling homeowners with some losses and creating some balance of how this loss gets realized without toppling the system. And it's going to be very, very, very tricky. And, I think this mortgage boycott, if you want to call it that, this week highlights that the household sector looks like they're not going to be too interested in taking a big portion of the loss here. So if the households can band together and insist that they be made whole, well, then where does the money come from? There's only one place. They're going to have to print it. And by the way, they can burn foreign bondholders for some portion of this loss, but that's small beans. I mean, that's nothing. The bulk of this loss is contained within the domestic financial system, and even the bonds that have been issued domestically are ultimately to a great extent held by the banks. So if the banks can't saddle households, the banks are going to have a big hole in their balance sheet. Ultimately, there's going to have to be a lot of money printed. I come back to the age-old story that ultimately the currency's got to bear the brunt of this. But In an environment where people are on the verge of panic, that's the last thing the government wants. So I assume they're going to clamp down on the currency in the short term because they don't want to exacerbate this budding sense of panic. But ultimately, there's a big loss that's going to have to be filled by printing money. And I think that invariably will drive the currency lower over some time frame, but not in the near term.
It's a very interesting, complex situation. Brian Maccarthy, Chief Economist, Macro Lens, thanks for coming on again.
Thanks, John.